Today, we're going to do something a little different. We're going to zero in on one single, absolutely wild day in the markets, January 22nd, 2026. This is our wrap-up, and we're using the live commentary from PhilStockWorld.com to really see how traders navigated, well, everything. We're talking geopolitics, a literal cheese fire, and a ton of economic data, all before the day's final big test.
So to really get what was going on this day, you have to picture the scene. We're at the World Economic Forum in Davos, Switzerland. But the vibe isn't global cooperation, it's just chaos. Robo John Oliver, who is covering it all for PhilStockWorld, quoted Deep Purple, and honestly, it was the perfect line for the moment.
I mean, you can't make this stuff up. While all the world leaders were inside sparring over President Trump's latest tariff threats, Davos itself was quite literally on fire. There was a blaze at the Congress Center, and at the exact same time, a fondue hut just went up in flames. It was the perfect metaphor for the whole global economic mood, a complete and total meltdown.
Okay, so let's dig into the pre-market setup. What was the actual context for all this chaos?
Just look at the whiplash here. On Tuesday, the market was getting hammered. President Trump was threatening Europe with these massive tariffs. Over a plan to buy Greenland, the S&P 500 dropped over 2%, and the VIX, Wall Street's fear index, it just shot up. But fast forward to Thursday morning, everything, and I mean everything, had flipped to relief.
So what happened? What caused this massive reversal? How do you go from full-blown trade war panic to a pre-market rally in less than 48 hours?
Well, this quote from Phil over at PhilStockWorld just absolutely nails it. Out of nowhere, a deal framework on Greenland appeared. Now, this wasn't a real solution, not at all. It was more like a strategic timeout. Phil called it the geopolitical version of a shakedown, and the market, which absolutely despises uncertainty, saw it as a huge green light to start buying again. The threat was off the table, at least for now.
And you can see exactly how the market reacted right here. The second that framework was announced, futures just jumped. The S&P, the Nasdaq, the Dow, they all opened higher. All that panic from Tuesday was completely gone, just forgotten. It was a classic relief rally.
All right, so that's the big picture. But now let's get into the nitty-gritty and see how real traders, specifically the community in the PhilStockWorld chat room, were actually processing this fire hose of information in real time.
So at PhilStockWorld, the whole discussion is guided by this really cool group of AI personas called the AGI Roundtable. You've got Bodhi, the systems architect, always looking at the structure of a trade. You've got Warren 2.0, the value hunter, sniffing out deals, and Zephyr, the macro logician, putting all the pieces together. Their entire job is to cut through the noise of a day like this one and find the actual signal you can trade on.
And this is where it gets really practical, right? You see these huge abstract market moves get boiled down into very specific questions from traders in the chat. Here's a member asking about a really common but pretty confusing options strategy.
And Phil's answer just gets right to the heart of how a lot of pros trade options. He explains it's not a bet that the stock is going to go down. It's what he calls a time bet. You're selling those short-term calls to collect instant cash. That's the premium. And you're betting that you can buy them back for cheaper as time literally ticks away. It's a way to generate income to help pay for your main long-term position.
Okay, here's another one. A classic problem that every single trader on the planet has to deal with. What do you do when a trade goes against you? A member is stuck in a losing trade on Coinbase and is basically asking, how do I get out of this mess?
The big takeaway here is the brutally honest advice in Phil's answer. He draws a really sharp line. For them, Coinbase is just a trading vehicle. It's not something they believe in for the long haul, especially with the looming threat that quantum computing and AI pose to the whole crypto space. The advice is blunt. Don't throw good money after bad, especially on something you don't fundamentally believe in.
So while traders were debating option strategies and Davos was, smoldering, a flood of really important economic reports started hitting the market, completely separate from all the geopolitical drama.
First up, the big one. The Core PCE price index. You got to understand, this is the Federal Reserve's favorite way to measure inflation. It's the number they watch like a hawk when they're thinking about interest rates, which is exactly why it's such a big deal for the markets.
And the number comes in at 2.8% year over year. So what does that tell the market? Well, it says inflation is not cooling off like we hoped. It's sticky. And that means the Fed is probably not going to be in any hurry to start cutting interest rates. That's a definite headwind.
Next up, we get the weekly jobless claims. The number? a rock-bottom 200,000. This signals an incredibly tight labor market. When pretty much everyone who wants a job has one, employers have to pay more to find people, and that can push inflation even higher. So another worry for the Fed. And finally, a little surprise from the energy sector. U.S. crude oil inventories actually grew by 3.6 million barrels when everyone was expecting them to drop. This suggests that demand for energy wasn't as strong as people thought, and that can be a warning sign for overall economic activity.
Okay, so let's recap. We've had geopolitical shakedowns, fondue fires, intense trader debates, and a whole bunch of mixed economic data. But the day wasn't over yet. The market was still waiting for one final test.
And what's so wild is that despite the sticky inflation data and the signs of weaker energy demand, the market just didn't care. The deal framework story was just too powerful. That relief rally held on all day, right into the closing bell. But the real verdict on the market's health, that was going to come just minutes later.
All eyes, and I mean all eyes, turned to one company, the semiconductor giant Intel. They were set to report their quarterly earnings the very second the market closed.
And this table just captures the drama perfectly. Intel's stock had been on an absolute monster run, up almost 16% just that week, fueled by pure AI hype, and they actually beat their earnings numbers, which you'd think would be great news. But their guidance for the next quarter was weak, and the market absolutely punished them for it. The stock immediately tanked 5% in after-hours trading.
It was just such a sharp reminder, wasn't it? For one completely chaotic day, the market was perfectly happy to ignore everything and just trade on a single geopolitical headline. But in the end, the fundamentals, the actual earnings, the actual guidance, they always demand to be heard. Which leaves us with the big question. In this crazy market, how much of what we see is a real signal, and how much of it is just smoke on the water?